Hi, I wanted to do a market update video, and my plan is to do more of these to help educate you, the consumer, particularly if you're in the market or think you will be in the market in the next, say, 6 to 12 months for buying a property. There's a lot of misinformation going on right now in the media. If you watch YouTube videos, a lot of influencers, people saying that the market is crashing. So I'm in the trenches every day, and that's not exactly what I'm seeing. But I want to present this market update with data. And I think that's the most important thing so a consumer can make an informed choice. So what's going on right now? I think a lot of people have heard what I just mentioned with the media. Right now there are certain truths, and let's talk about those. One is inventory in most markets has increased, and in some areas even substantially. So in my market right now, if you were to look at the data, our housing inventory has increased about 100% since this time last year. So that is a big jump, and from some of the things I've read, it's about the biggest jump in inventory increase really throughout the country since for many years, for about 15 years. So that's number one. Number two, interest rates have gone up, and that's a truth, obviously. Rates were about low 3% range this time last year. Now, depending on the lender, you're going to be somewhere around the low to mid 5% range on a 30-year fix. What else is going on? We're starting to see more price adjustments. That is certainly happening as this inventory has increased with so many sellers who have overpriced their listings in the past couple months are now starting to understand the reality of the market. So we are starting to see more price reductions. And lastly, I would say the pending home sales. That number is down from this time last year. So that's data. Those are truths. And you can say, yes, the market is being challenged. Certainly, there's no question that demand has declined. And the reason for that is primarily with the increase in interest rates. It has impacted a buyer's affordability. So depending on your market, your affordability has declined about 30-40% in the past few months because the rise in interest rates. So where does that leave us though? When I got into real estate, as an example, many years ago, inventory was about 5 to 6 months on average, depending on the submarket you were in. And that slowly has declined over time. But if you look at the numbers today, even with the substantial increase in inventory in the past 2 months, we stand, again, depending on the submarket, anywhere from about 1.1 to about 1.6 months of inventory in my market, which means there's about a month and a half, let's just call it that, a month and a half of inventory of homes for sale. And again, a balanced market is generally 5 to 6 months. So in putting this in perspective, there's still quite a bit of low inventory. Number two, I would tell you, there's still buyer demand. I was just involved today with a client of mine who submitted an offer yesterday, and we're in a competitive situation, 7 offers. And no, homes are not selling for $50,000, $100,000 or more than the list price, maybe as it was 6 months ago. But now it's not uncommon for a seller to receive list price, maybe slightly below or slightly above. In the situation I'm in now, where it's about $20,000 over list price. A week prior to this, I was involved with 5 offers. Again, competitive process. So homes are selling. We are still seeing multiple offers, but it's not at the same rate that we saw before. So I think what's happening is the market is normalizing. It's going to be like the way it was pre-COVID, pre-2018 or so, where there was more inventory and steady buyer demand. It's unrealistic to think that we're going to experience a 20-25% price appreciation as we have in the past few years. But if anything, in my view, the market after COVID where people were paying, again, $50,000, $100,000 more over list price. 20, 25 offers, 40 offers. A buyer was competing. I've had many clients that gave up because it was a challenging environment. You had to give your first-born child sometimes to get a property, right? That market is gone, but we are now shifting to a more normalized market, but it's not crashing. When you're in competitive situations where there's still 3, 4, 5 offers or more, homes are selling for list price, you have 1.5 months of inventory, and that number probably will grow. But even if it stabilizes at 2.5 months, that's nowhere near enough inventory to handle the buyer demand that we're going to see in the future. I think if anything, if you're a buyer, if you're on the fence, or you're thinking whether now is a good time or in the next few months, I think now is a golden opportunity. And the reason is, even though you're going to be paying more on your interest rate and your monthly payment's going to be higher, you won't be paying 25, 50, 100 grand more to obtain a property. Probably you'll get it at list price, maybe slightly more, maybe slightly less, depending on your situation. But if you're able to lock in a good interest rate, 30-year fixed rate, and it's say somewhere in the mid 5s, even if it gets up to 6%, historically speaking, compared to where it was in the past, I was involved when interest rates were 8, 9, 10%. When we were in an inflationary environment back in the 70s, interest rates were in the teens and home prices were going up. And so in putting things in perspective, you're going to see most likely, as of today, most likely just small appreciation over time and less competitive situations when you're looking at homes. And I think it's a great opportunity to buy. You're going to have less competition. You're going to be able to negotiate some terms and possibly extend some contingencies or work on the contingencies, again, not having to give them all up. And you're going to have choices. That's all I heard about for 2 years from buyers, where we don't have number one choices, obviously, and it's too competitive. And now it's going to be your time as a buyer. But also I want to point out, even some of the experts that I follow, Fannie Mae, Freddie Mac, CoreLogic, they're all predicting, as of today, price appreciation in the housing market 5 years from now. Depending on who you follow, it's anywhere from 15 to 20, 25% that they are projecting homes will increase within a 5 to 6 year time frame. I think real estate is a great hedge against inflation, and history has proven that as hard assets go up when we are in an inflationary environment such as we are now. I hope you found this useful. Please subscribe to my channel. It's brand new. We're going to try and build up the subscribers, provide quality content, and give information out. That's the most important thing, I think, is to educate you as the consumer, whether what's going on as a buyer, as a seller, if you're an investor, giving you tools, what's going on in the mortgage market. That's what I plan to do, to provide information, data, and to help you. Please subscribe to the channel, and we're going to be putting out more content. I hope you found this useful, and please send me a message, send me a comment if you disagree, if you agree, and if you have any questions. That's what I'm here for.